All right, we're live. It is, what day is it? Jeez, man. It's Thursday, 6:30 Mountain, 8:30 EST. And we had the unemployment data come out this morning, and I had a small trade on the euro, and that is fortunately going in my direction. It's a trade that I've been kind of flirting with over the past couple of days, and it just is in a weird spot. So I was in and out of it, just kind of took a small loss on it here, minor gain on it there. Finally, the conditions lined up to where I could take and stay in a trade at a quarter size position. So I took that prior to the unemployment data announcement, and it is going in my direction. Let me throw up this QR code to the top right, and we'll talk more about who we are, what we do a little bit later. For now, we're going to jump right into the content. So let me share the screen. Okay, here we go. So yeah, that's the trade. I'm going to zoom in on that so it's easier to see. And basically, it's just a giant head and shoulders trade where there is a pattern that with the euro has over 80% accuracy, 80% hit rate. So 8 out of 10 times, or 4 out of 5, even better than that, it's going to be a successful trade for me based on my testing. And this is what that pattern looks like. Now, there are some algorithmic concerns, which is why I only took a quarter size position. But if you look at this trade, the risk to reward, right? So the amount of money I'm risking compared to the amount of money I could win is very lopsided. It's very asymmetrical. It's very much where I'm risking a small amount in the blue square to win a large amount in the green rectangle, I should say, not a square, but rectangle. So basically, this is a 3.6. If you can see the number on that screen, it's a 3.6 risk to reward ratio. That means that I can risk $100 to make 360 if I don't take all the profit until the very end here, until the price goes all the way down to my target. And if you're super new to trading, what you understand about this trade is that I am counting on the price heading down, okay? If price heads down on this, I win. So, and this is a Forex pair. If you're super new to trading, this is a Forex pair. It's the euro in terms of the US dollar. So in this case, if the euro continues to go down against the US dollar, then this trade will go more and more into profit. Okay, so and I did tell my room, I told the Algo Factory that I am getting into this trade ahead of time. So now, of course, people at Algo Factory are going to do their own research and they're going to take their own trades. It's just a trade idea, right? I'm just letting people know what I'm doing. They can watch me do it. They can do whatever they want to do. But this is a decent trade. And once things continue to go in a certain direction, I'll be able to add to this trade, right? So that's why I only took a quarter size, because of some algorithmic concerns that my my private members do understand and know about. So all of that is great. Let's run into the comment section. Excuse me. Wow. Let's run to the comment section. I don't see any comments yet. That's okay. We got a few people watching. I'm going to grab the link, the show link here. I'm going to throw it up over on some of our private groups and remind people that we are live, even though we do have a few people watching. Let's see here. Okay. Let me throw it up on one of our Discord groups. Here we are. With the keyboard clickety clack. All right. And then I'm going to throw this in, or I'm just going to remind people over on X that we're live. Here we go. Actually, X is going to do that for me. And by the way, if you're watching on X, let me know if you can see the screen. I had an issue going live on X yesterday where on my where my display was fuzzy on my side of things on my PC, and on my phone it was actually pretty clear. So I'm just going to ask people to tell me, can you all see if the screen is clear on X ? Okay, cool. So That way, if anybody can report to me on that, you can do it in the comments section. I thought yesterday when I did a test, X actually allowed comments to come through and I couldn't answer them on X. I couldn't write through my streaming software to answer the comments on X. I know that's coming. It's just not here yet. So, that's one thing to know. If you're talking to me on X, I can see, I can hear, I just cannot reply, not very easily. So I'll just simply reply verbally if I can do that. Okay, I do see I'm live on here. I'm just gonna click on the button and see what happens. Yeah, it's fuzzy to me. This is so weird. Oh well. If it's like I say, if it's fuzzy to you on X, let me know and we'll find out. Just let me know in the comments. All right, cool. So let's move on in the show. Aside from all this housekeeping that we're doing here, let me see if my private members have any questions so far. No, we got a comment here. Robert can see clean. Thank you, Robert. Thanks for telling me. Okay, Robert says fuzzy. Can see screen. Yes, fuzzy. Yeah, I don't know what is up with X, man. Look, until X can fix the issue, then just head over to YouTube because I'm broadcasting in 1080p. So I'm broadcasting as clean as it can go. Let me double check the settings real quick. By the way, while I'm dealing with this, go ahead and yeah, I'm on 1080p. It's as clean as it's gonna get. So something's going on with X. If you guys have any coins or anything you want to see, like crypto coins or stocks charts or forex charts, or if you want to see like an ETF or whatever, if you have anything you want to see, let me know. Let me know in the comments section. I will chart it out for you. That's kind of what this is all about. It's for people to come on. And if you have questions about trading in general, just any kind of question at all, go ahead and ask. If you're watching on X and it's fuzzy, just head over to YouTube. That's what you want to do. I don't know why I can't get X figured out. I don't know what the deal is with that. I've asked questions about it, and the premium support is just slow rolling, man. I think they might be overwhelmed. So we got our Yo trade right here. Let's look at the unemployment data that just came out because it pushed the trade in my direction. So this meant that the dollar got strong according to the unemployment data, which means I'm going to guess that the unemployment data is a green number. I'm not flipping over to the screen just yet. I want to make a guess that it's slightly less unemployment claims than expected. Okay, so here's the unemployment claims. Let's refresh the screen. Comes out at 6:30 a.m. my time, which is 8 minutes ago. And there it is. Yep. So unemployment is 187,000 claims, which is 206,000 on the forecast. So it's less than expected, which makes sense. That's why the EUR USD dropped based on that, because the dollar got strong. So let's talk a little bit about this. I know it's something we talk about often, but it's an important thing to understand. When you're looking at a website like Forex Factory, or if you're over on TradingView, which is our trading software, and the data comes out, and that data is going to affect the price of things, at least in the short term. Usually, if it's a red on Forex Factory, if it's a red little kind of folder right there, if it's a heavy impact event, that way you'll know that whatever happens here can affect especially currency prices. It'll affect stocks, it'll affect crypto, it affects everything. And what happened here is the unemployment claims came out less than expected, which is strong, right? It makes the economy look strong. And the idea between all the rate hikes last year was to, in a sense, weaken the economy. And the reason we're doing that is because there was inflation after printing trillions of dollars, really trillions of dollars over the years, really, but especially during COVID. There's, I think, 7 trillion that we know about got printed in 2020, and that's that we know about. And whenever you print money, that gets multiplied by orders of magnitude because of the way that money is created. So you print 7 trillion, and really 70 trillion kind of ends up effectively going into the economy. And I'm not saying exact numbers here. I'm sort of saying just how the effect is. Okay, so it might be 80, it might be 20, it might be 120, but understand that if you hear that the Fed prints 7 million, you can multiply that by you can multiply it by 50 for all I know, because it's extremely hard to track. And the reason is that the Fed prints that money, And then the Fed gives that money to commercial banks. And then the money becomes a liability on the Fed's sheet, and it becomes an asset on the commercial bank sheet. And I know that starts to get a little bit into finance and confuse people. And trust me, it's confusing. But what I can explain very simply is that the money is created when these commercial banks loan it out, because they can loan out. Really, there's no rule at this point that I know of beyond their own internal rules as to how much they can lend out. It has to do with how much they can handle. If people come to get their deposits, that's at this point, I don't think there are what are called reserve requirements. Now, it used to be that a bank could only lend out as much money as it had. So if the bank was given $1 billion, it can lend out $1 billion. It's a long time ago, right? Prior to, I don't know, 1971 probably. And then what ended up happening was they took that reserve requirement away, and well, at least they reduced it to where you could only loan out maybe, or you're able to loan out 10 times what you had, right? So you had a 10% reserve requirement, meaning, and I'm making this number up, but I think it actually did exist at one point, where basically you could get $10 billion from the government and you could loan out $100 billion, right? And then it went down to like, yeah, the Dodd-Frank truck face says it's actually DODD, Dodd-Frank. But long story short, what they ended up doing now is it was down to 1% at one point, where you could get $1 billion and loan out $100 billion. And now there's just basically no reserve requirement. And it has to do with whatever your bank can handle. I'm sure there are some kind of regulations, but it's not, I don't know what they are. I don't know if they exist, to be honest with you. But I can tell you that when you print $7 trillion, that can, it would not surprise me if that turned into 70 trillion easily, or 10 times that. Who knows? It's unknown. However, what happens when that much money goes into the economy through the shadow banking system, it ends up turning into inflation, because so much money is out there and it's chasing the same amount of goods. So it's not that these goods get more expensive or more valuable, it's that there's more money out there, because money is not wealth. Wealth is goods and services, right? So when there's more money, that means it's like there's more money competing for these goods, and that means the goods go up in price. It's not that the goods become any more valuable, and that's why we have inflation. That's why you have McDonald's. If you saw the video I did a few days ago, you have $18 Big Mac meals at McDonald's. It's McDonald's, bro. A Big Mac should be like $3. It's like it should. Dude, you could go to like a nice restaurant and get a really nice meal for $18. Like, I don't mean super nice, but I mean, you could go to like a barbecue place and get like an open face, burnt ends for 13 or $14. Instead you go to McDonald's. McDonald's is like, I mean, I don't want to, say the wrong, I don't want to talk too much trash, but McDonald's is not like that nice. The food you can get for $18 out there is way nicer than a Big Mac meal. So the inflation that we're seeing is a result of all this money printing. And when that happens, you have to, at least the only recourse that the Fed has is to hike interest rates. And the stronger the economy looks, the more they have to consider hiking rates. And what you're seeing on the screen is a sign of economic strength, where they forecasted the unemployment claims to be at 206,000. And it ended up being less. Less people are claiming unemployment, and that's at 187,000. So that's a sign of strength. Plus, you got building permits and the Philly Fed. Building permits also came out stronger. Philly Fed, not so much. The manufacturing index came out lower, but that's a weaker issue. That's a lower impact event. Unemployment claims is the headline ticket, and therefore that is why if I go to the EURUSD, let's use a different chart here. There's our AVAX trade that's also winning. This AVAX trade took a minute. We'll actually dive into that in a little bit. If you go to the EURUSD and you look at a lower time frame, you'll see how quickly that price is moving just based on that announcement. Like you go to the say the 5-minute time frame, and you'll see price right at that time. I know it's kind of hard to see with all that green, but you can see the price jam downwards hard. That was a reaction. So let me go to a different, let me go to ICE here, or FXCM. So you can see that this blue candle cramming downwards. It did get bought back up, but now it's headed back down again because that was probably the direction it wanted to go anyway, which is why we're in a short. But that was a reaction to that news. People sold off the euro to buy the dollar, right? Effectively. Morning Peep says, MavBet, good to have you in. So it's a good time to take some chart requests. It's halfway through the free to the public live lab. So if anybody has a chart they want to see, I'm going to go ahead and look at Bitcoin so we can just get that out of the way, if you will. Yeah, Bitcoin went up on that news. Actually, no, it didn't go up on that news. I mean, it went up when that news came out. But usually that is, believe it or not, that's counterintuitive, right? For that candle to go up based on that news. You would think that it would go down, but Bitcoin is rather strong right now. It's in a range. We're going to back away. We're going to zoom out right now. We're going to take a look at what's going on in a way that makes sense. So give me a second to get this screen cleared out. Bitcoin has developed a range in the low 40s. Okay, so you had the ETF news. Bitcoin really ramped up hard. A lot of people thought Bitcoin was going to go to the moon. Just a quick reminder, if you're on X and if your screen is blurry, I don't know, I've asked them for help to fix it. I've not heard from them. So just, head over to YouTube until we can get X fixed. I want people to watch on X, but if the screen's blurry, then there's not much you can do about it. Okay, so head over to YouTube. All right, so Bitcoin is ranging right now, and it's even in a micro range. So it's kind of bouncing between these two prices right now, say between about 42,000 and 43,500. It's not doing much right now. And that has to do with probably January is usually a slow month anyway, but also price is just finding an equilibrium, right? At this point, there's a good chance that price is going to come out of this range after not too long. I'd say within a week or two, it should come out, but it may not. We don't know what's going to happen. But once price comes out of the range, it may come to the downside. It might go up. It doesn't necessarily have to go down. I was just drawing some examples yesterday. That's why those arrows are there. But price should bounce around until it comes out of this little box. And then it will probably bounce around in that large rectangle, which is between 40,600 and 44,400. Now let's take a look at where the liquidity is. Liquidity is going to build at this point because price is not moving very much. So people are going to start taking trades. It might be a little bit slower than normal just because of the time of year. That could be the case, but liquidity will build. Bitcoin has a lot of activity on it compared to a lot of stuff. It's a very popular thing to trade. So let's see if we could take a look at the liquidity map. And liquidity, for those who don't know, okay, here's Bitcoin. There's a lot of liquidity to the upside. There's some to the downside. So price will go to these liquidity nodes depending on which way the charts favor a move. So if the chart favors a move up, then there's a good chance price will run up to 44,700 and 45,550. So we'll put this on the chart. 44,700, which is up here, a little higher than this box, but that's kind of still in the range, but it's not technically. And then what do we say? 45,550. So you have liquidity above price, and price I think is still pretty bullish. The ETF news, of course, was wild. Price went up and it got slammed down. We explained some of that move down. At least the initial move down, we explained that on a show. However, price may want to move up here, or if you look at the liquidity map, it may actually head down to 39,800, right? If price favors a move down, there's liquidity at 39.8 and at 37.3. Not as much, but it's there. You got 39.8, which is right here. And we have 38.3, which is right there. So whenever price breaks out, these are the targets it could go to. Now, the upside makes an awful lot of sense because price made it up to this area before. So there's liquidity up here, and we know that it's there because we have visibility to the liquidations on the futures exchanges. That's what Kingfisher is. And I know that sounds complex to new traders, but if you decide to come over to algofactory.tech, just tap that QR code. We'll explain all these things to you. It's not that complex. It's just learning a new language. It's not a big deal. And then I would bet on, if price favored a move down, getting liquidity in this area around this 38.3, that's realistic because there's a fair amount of price action there prior to this big move up. So really, wherever price goes, of course, by definition, is going to depend on what direction the charts favor. And as of now, algorithmically, let me see, that's the daily, that's favoring a move up. The weekly is favoring a move up. That's the daily, sorry. The weekly actually is, the weekly is a little bearish. So this is probably why price is not heading up right away. Okay, so the weekly it's like bullish against heavy resistance. So with the weekly chart, basically price was moving up, but it needs to take a break. That's what it is. And that break could actually push price downwards. It could be a strong break or it could be a weak break. It really depends on how much of the market wants to sell right now, right? And that really is what it depends on. So when the weekly bearishness washes out, if the daily bullishness is still there, it may be there, it may not. It'll really depend actually on what's on the monthly bullishness, right? So if the weekly bearishness, if the weekly sort of tendency to want to take a break and head down a little bit, if that goes away, and if the bulls are able to keep the price where it is until that weekly impulse to go down a little bit goes away, the high time frame on Bitcoin is almost always bullish, right? So the monthly chart on Bitcoin, it's almost always bullish. Right now it's bullish into resistance as well. So price may range for a bit. It seems to me, if someone said, hey, what's going to happen with Bitcoin, like in the next 2 months or something, if I had to answer, my best guess, and no one knows, like literally nobody knows, my best guess would be the price ranges anywhere between high 30s and high 40s for a few weeks, and just kind of goes back and forth. That's what I think will happen. And it may actually take a break if traditional finance, if like, what do you call it? If the stock market and everything else takes a hard hit, then Bitcoin will probably go down with it for a while. But aside from that, I'd say Bitcoin's going to range where it is and then probably start going up because we are in a halving year. And I'd say by this time in maybe September, or say October, we'll probably see a pretty strong move up if we haven't seen it already. Now, usually what happens in a halving year is price kind of takes a break. It might go up a little bit heading up into May, and then there's a sell-off at the halving, which actually this year I think is going to be in April. And then price at the end of the summer tends to start really going up. Now, it's a very small sample size when you're trying to go back and look at what happened in prior halving years, because there have only been 2 or 3. I think there's been 3 or 4 actually. So because we don't really have a lot of data to analyze when it comes to halvings, we can't really be too terribly confident on what exactly is going to happen. Plus we have the ETF. Now the gold ETF didn't pop off until almost a year after the actual ETF was introduced and approved. So, just because the ETF was introduced doesn't mean that Bitcoin's going to go up right away, but I think it means it will go up in the future. So I don't see any requests in the chat yet, so I'm just going to move on. I'm going to talk about Ethereum. If we have time, I'll get to Solana and Ripple. Let's do ETH. Okay, let's do this. Ethereum is showing a nice pop-up, and if Ethereum can remain strong, this is actually something I charted yesterday, right? And I used something called a fib extension. That's what these lines are that are different colors. So if you want to know more about how I do these measurements, all these drawings, basically I did this measurement in our private group yesterday, and this remains unchanged for me. I think price might dip down into the 23 like the 2150 to 2380 range, and then pop up and possibly go up to grab 2890 and then maybe 3349. So I would look for a trade like that if I were to trade this right now. But I would understand that if Bitcoin and the rest of the market were to have some kind of impact, like if there's a problem in TradFi or if Bitcoin takes a hard move down, then that could ruin this trade. But this is a nice trade. And also, this could allow for a nicer entry. Price could come down a bit before it goes up. It's very, very possible for price to kind of pull one of these and then go up, right? And that would give an entry that has really, really good risk to reward. You're talking about like a 4-to-1 if you don't take any profit off on the way. So that's how I look at Ethereum. Let's take a look at Solana. Solana looks like Ethereum. So what I would do with this is I'm going to look at some nearer term targets because Solana is on a tear. It's an all-time high. But if Solana breaks out, and I'm not sure it's ready to yet, but if Solana breaks out and I was just trading and not holding, I would take profit at 141, at 162, and I would consider taking off some either risk or profit around 126, around that all-time high. But right now, Solana appears like it's gonna. This was a momentous move. It's an all-time high, as far as I know. No, it's not. Solana's all-time high was looks like it was at 260. Okay, so we have room to go up. But I would look at something like this, right, on the near term. That's what I'd look at. And if I were looking for a higher time frame play, Valentine just put, oh, Valentine's dog. It's a happy birthday mumbles. That's adorable. Very cute little Shih Tzu, I think. If I were to take a higher time frame look at this, like some more extended targets, I wouldn't be afraid at that point to take profit at 150 or 149. Let's actually be more conservative than that. I'd look at about 145 actually, and 172. Those would be my targets if I were holding on for a little bit longer. But as a trade, I tend not to hold that long. So I would go for those first lower targets. And then let's go ahead and do Ripple, since those are the ones we talked about in the description. And Ripple itself, it's a little tougher to trade. It's not. I wouldn't trade Ripple. I am interested in looking at the way it is ramping up so like steadily though, and that's Ripple for you. But look at the way that it's nothing but, with the exception of this this SEC lawsuit candle, it's just mobbing up. It's just an upward move, right? You got higher lows, except for this madness right here. You do have this Bitcoin wick that Bitcoin caused that nasty wick right there. But in the end, you're just getting higher lows. And if we were to draw a trend line to just go along these higher lows, then you could extrapolate that and say, well, it might just be slowly moving up. And Ripple will, I mean, it does move with the rest of the crypto market, but it also has its own world and independence. So I would not be surprised to see Ripple just continue to bounce up this trend line for a while. That would not surprise me one bit. Ripple is that company has a lot of relationships. It's like a small bank. It's like a small commercial bank worth, I don't know, $50 billion. I don't know. So let's look at the other one, the last one, the last one we got time for is going to be MATIC, which is Polygon, which is an Ethereum layer 2. Now, Ethereum did look pretty good, so MATIC might look pretty good too. I'd say with MATIC, it's in a more or less of a range on a high time frame, so I would maybe look to play that range. So I'm comfortable with this being the range, right? More or less. And I might be closer to something like this. but I would be comfortable going long at the bottom here. So as price approaches, even at this green line here, say like 75 cents, 74 cents, I would be comfortable looking on the high time frame chart to go long on that. And then just keep trading inside the range is what I might do. Like so here, maybe, so buy here, sell here, buy here, sell here, and just trade that way. And sure, it'll pop out at some point. And then when it pops out, then I take a small loss and then I start trading to the upside. But this does look to me like it's gathering up steam for a move up. That's what it looks like. Now, just like every other crypto out there, if there is some kind of trouble in the traditional market, then we'll see all the cryptos probably head down. It's very likely. So we are now at the end of the private live lab. And so now that we're here, now remember, we went straight into the content. We didn't do any commercials at the beginning. And that's a habit I'm trying to get into. So now I'm going to do the commercial. Come over to www.algofactory.tech. And we're going to show you how the basics of trading. We're going to show you how we're able to teach you to create your own trading method. And the trick with trading is that a lot of people, they try to use somebody else's method, and it just a lot of times, I'd say most of the time, doesn't work. They'll get maybe streaky, they'll get some wins, they'll win for a while, and then the market will change on them. And then they will start losing, and they'll lose several times in a row, and they'll be like, oh, this doesn't work anymore. And that's actually a way that a lot of traders fail. So what we do is we teach people to actually create their own method, and they go back in time and they test that method, and they find out how often that works. They find out that there are streaks. Like you might just see your trade go down a few times in a row, 5, 6 times it happens. It's it's a little bit, it's uncommon, but it does happen. And when that happens, if you understand your, I got to invite the gorilla here. If you understand your risk to reward ratio, if you understand your statistics, you're not going to quit trading because you might go through, one of those scenarios where you lose a few trades in a row. So you developed your own confidence. You'll stick with it. You'll adjust. You'll adapt. You'll stay with it. And you're going to have that psychological component that makes you a successful trader. And that really is the hardest part of trading. So I'm going to go ahead and I'm going to let you zap that QR code with your phone. And then also just go to www.algofactory.tech if you want to learn about that. We hope to see you soon. I'm going to go ahead and throw us into the private live stream here. Give me 1 second to do that. Yep. Opening the live stream right now. All right, everybody. We will see you tomorrow.